Yo, what's going on, guys? So this is gonna be the only ICT basic video we ever upload. The rest will be all about models and stuff like that. But in this video, I'm gonna be going over what fair value gaps are, order blocks are, basics of the models that I look for, and all the stuff like that. So if you have no idea what ICT is, you're gonna want to pay attention to this first part. If you do know what ICT is, but you want to get more into it, you could still pay attention to this first part. But if you already know what an order block and fair value gap is, you could definitely skip the beginning. So it's up to you. So first things first, we're gonna go over what a fair value gap is. So a fair value gap is, let's say we get a candle right here with a wick, and this is really bad. So we have a candle there with a wick. We have another giant candle with some wicks. Let me just actually duplicate this. So these are really ugly candles, I'm sorry. And then we have another giant candle with a wick, okay? So your fair value gap would be right here, okay? So do you notice how this wick and this wick does not overlap? So you can see it creates this gap within this candle. That's what a fair value gap is. Same thing goes for bearish candles, okay? So bearish candles, same thing. So let's go over a few examples. As you can see, you're going to see tons of fair value gaps in here. And what a lot of new traders think is, oh, you play every fair value gap. But no, that's not how it works, okay? So it has to be in the right parameters. And I'm going to teach you guys the right parameters after this, okay? So if you notice right here, this is a 4-hour fair value gap from this wick to this wick because it creates that gap. So that's one example. A bearish fair value gap could be something like this, okay? Like that. Again, you're going to see a lot of fair value gaps. So look, right here, we got one right here because these don't overlap. We have one right here. And these fair value gaps are, there's going to be a lot of them, as I said, and not everyone will reject their bounds. They have to be in the right parameters, and I'm going to teach you the parameters next. So that's what a fair value gap is, but first I'm just going to go over what an order block is before I show you what parameters you need to take these fair value gaps or order blocks. So an order block is another place you want to look for an entry in. So you want to enter in fair value gaps and you want to enter in order blocks, okay? So an order block is another entry point. So sometimes when there is not a fair value gap, there might be a really clean order block, so that could be another point of entry. So what an order block is a green candle before a down move, which is a bearish order block, excuse me, and a bullish order block is a red candle before an up move. So as you can see right here, see this green candle before this giant dump? This whole candle would be an order block, okay? And what I like to do on these order blocks is I like to draw the line from the open of the candle to get a more precise entry. So we actually rejected this to the cent. This is actually a perfect example I didn't even realize. I was trying to show you like just a random example. So look, the green candle before giant down move, draw out of the open, and as you can see, we break above a little bit, but the whole candle is the order block. So your stop loss would be above this wick, above this order block, okay? So same thing. In this example, if you went short here, your stop loss would be above this. And I like drawing the line at the open because that's where algos trade, and it gives me a more precise entry rather than entering in a giant zone. So an order block is another point I look for an entry in. And something that I will mention is if your bearish is bias, you should, oh my gosh, I just realized what I said. If your bias is bearish, you should see all these bearish order blocks being respected. So in this example, it's respected for a little bit, but we never go down and hit liquidity, which is these equal lows, and we end up going by it. So we have it's kind of like a roadblock in this scenario. So in this scenario, the bias is long, but you're still going to see these order blocks are kind of going to serve as roadblocks. And I've seen many very clean order blocks catch knives. I've seen fair value gaps catch crazy knives, and they'll just they'll get to these spots, and then you'll see like a little bounce, a little scalp you can make, because these fair value gaps got some major value of getting entries. So that's just something you want to look for. Okay, so this is a bearish order block, this is a bearish order block. A bullish order block would be something like this. This right here. See this red candle before this up move? And as you can see, we never actually tapped the entry, so if your limit there, you wouldn't have got filled. But again, technically this whole order block is the candle, so you can't enter prematurely. I just like to wait till it gets to the open. So that's a bullish order block, red candle before up move. Bearish order block is this green candle before the down move. Okay? Okay, so the next thing we're going to go over is when do you take these fair value gaps and these order blocks. Okay, so I'm actually going to go to my Twitter. Okay, so as you guys can see, this is the model I look for. Okay, so I like to look for these equal highs, which is buy side liquidity, and once we hit, so this is a bear setup, so once we hit liquidity or go over equal highs, I like to look for this setup, and I like to target sell side liquidity. So what does this mean? So basically, understanding market structure is going to be the first thing you want to understand. So hopefully you guys understand that. Basically what market structure is if we're creating higher highs and higher lows, that means we're in uptrend. So boom, 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 this is an uptrend, higher highs, higher lows. Okay, and then same thing goes for downtrend. I don't even know what I'm doing. Okay, I'm sorry. Same thing goes for downtrend. So we create lower highs, lower lows, as you guys can tell. So that's the basic of market structure. So that's going to be very important to know for this. So let's go back to my model. This is what I look for. So I look for buy side liquidity, which is, I like to look for equal highs. So and sometimes it's not always equal highs. It could be a swing high or swing low. So for example, let me try to find a good example. So look, see these equal lows? This is perfect. Once we go down here, I'm not trying to go long. I'm waiting till I see the model, okay? So once we go below these equal lows, which I see is liquidity, I look for the model. So we get the retrace, and as you can see, we get a small market structure shift. So do you see how this wick is kind of very obvious? We actually wick above that. It doesn't matter if the candle closes over or not. We just need to go above it. We get that, and then so that would be your MSS. So let me just show you. So that'd be your MSS right here, and this is actually the buy model. I should probably have the buy model on. Give me 1 second. Okay, so this is near MSS. We go over this last lower high. Okay, so I'll label this as MSS. And look, it retraces in this fair value gap. And look what it does when it gets in this fair value gap. It bounces out. So before you take a fair value gap, you want to look for something like with this. You want a liquidity grab. I like looking for equal highs and equal lows. Again, when we go under here, this could go all the way down here and just totally break, and breakout traders could win. But you're not in the trade because you don't see the model, okay? So you shouldn't even be in the trade, so it wouldn't be a loss because you wouldn't just randomly long under here. You want the model first. So in this situation, some people say, oh, this isn't obvious enough. This isn't really an important low. Many people say this is an important low because this is very obvious. So again, we still see the same setup. When we break over this low, as you guys can see, that'd be the market structure shift, and look where we retrace, fair value gap, okay? So this would be your entry. And again, so we have an order block here. So if your bias is long, you want these order blocks to be held. You do not want them to be cut through, okay? So it's important that we never go below the order block, like the bullish order blocks. If your bias, if your bias is long, and it's important that we never go below or above the bearish order blocks if your bias is bearish. So just keep that into account. So you need the market structure shift, Okay, that's your first parameter you look for, the market structure shift. Your second one is you want to make sure we took liquidity, so we went into these equal lows and we retraced. And according to the setup, what else do you look for? You see the 0.5 and 1. That's going to be on your fib. So on your fib, you want to have those settings. And if you look here, you want to draw the fib from most recent swing high to swing low. And some people get confused about where to draw their fib, but look for the most obvious high and low before the fair value gap. And in this situation, see how obvious this low is and see how obvious this high is. That's where I'll draw it. So your final parameter to take the trade is you want a long to be under the 0.5. Okay, so I'm just going to explain this quickly. But when you draw a fib with these levels, which are not fib levels at all, above the 50% is going to be discount, premium, and below the 50% is going to be premium. Okay, or above the 50%. I think I said that. I don't even know. So this is going to be a premium, this is going to be a discount. When you go to the store, you want to buy things at a discount. So when you're longing, think about you want to buy things under the 0.5 level. And again, when something is a premium price, it's a high price. So you don't want to buy that. You want to short that. So that's how I kind of think of it. So in this situation, discount would be under, the fair value gaps in discount, and we have our market structure shift. And we took liquidity. So all four parameters are met. So this would be a fair value gap you take, okay? So hopefully you understand that. Now I'm just going to go over a short model real quick. Let me see if I can find a good short model. Here's another long model. So in the 4 hour, remember how this was an example of the fair value gap I showed to you guys earlier? Again, how do you know to take this fair value gap? Because we got the MSS, the market structure shift. We energetically break this last lower high. We create a giant fair value gap. And if you look, in some situations, here's what you're going to notice. We never hit discount. Okay, this is illegal trade. Didn't work. But no. The reason why I watch both US 100 and US 500 is because sometimes on one we will hit discount and sometimes on the other we won't. So you just have to kind of deal with that. So as you can see in this example, we break right under discount. And do you see how we went under this fair value gap? That doesn't really mean anything. Like we wick a little under and above fair value gaps all the time. The cleanest ones will just wick right in and bounce right out. But if you notice, when this wicks just under this fair value gap, US 500 at the same time is still in this giant fair value gap. It's not even close to the bottom. So you're just gonna have to watch both charts, and with stream time you'll kind of be able to tell, oh, it's okay that it's wicking down here. US 500 is still in the fair value gap, so it's still probably gonna hold. So that's just something you want to take into account. So let me just show you an example of a short setup. And I think we had one last Friday on the 1 minute. And I do use a 1 minute a lot. That is one of my main time frames. But you have to make sure that it lines up with confluence on the higher time frames. So right here, this is going to be a short setup. So pause the video, see if you can find it before I do, and yeah. So if you couldn't find it, that's okay. But basically, see these equal highs. Wild market makers just randomly create equal highs as perfect as that. So in this situation, we get the buy side liquidity taken. Okay, so this is gonna be your short model. And let me just go to my short model on Twitter. Give me a second. So look, we have buy side liquidity taken from these equal highs. And when we go above these equal highs, sometimes we could break and go all the way up here. That's okay. You're not going to get these sell models every time you break equal highs. There's been plenty of plenty of times where we broke levels and we just skyrocketed it, and I never see the short setup until way up above. So but by that time we create even higher equal highs from above, or there's equal highs on a higher time frame that I didn't see that we still haven't hit yet. So in this situation, we create the equal highs, we get a retrace, and what do we need for the setup to take? We need a fair value gap, we need a break of structure, or market structure shift, I mean. We need a liquidity grab, which we have right here, and then a good fair value gap, or trace into that fair value gap into premium. Okay, so step one is you look for the market structure shift, which you get. See how obvious this higher low is? So we have the higher low here, and again, you can see how obvious this is. Okay, so this is a market structure shift, and we form a fair value gap here, but we also form one there. So how do you know which one to take? In this situation, you draw your fib from most recent swing high to swing low. And in this scenario, we never close above this fair value gap, which is important. And we never close above this order block, which is important. But we also have another fair value gap right here, which you could even get a tighter entry in. So it depends on your risk management. Some people would have had a limit here. Some people would have had a limit here. But if you had a limit here, your stop loss should be up here. And I know a lot of people's risk management that would be way too big of a stop loss for them. So what you can do is set a limit here, but you gotta expect you might not be filled, because this fair value gap could be big enough to cause a rejection here and just go down there. Okay, so you gotta understand that. Sometimes you won't get filled, especially if you wanna fair value gap more in premium or more in discount. So this is kind of a little more into discount than the other one, or premium than the other ones I showed you. So you just can't get FOMO. You got to understand that sometimes you might not get filled because it might not get your entry that lines up with the risk management. So I'm going to try to find an example that kind of goes with an order block. Let's see if I can find a good one. See, like in here, this example, we have the order block right here, but it doesn't get down the entry. If it did, out along there. Because we have the market structure shift, as you guys can see, we broke above the last obvious lower high, so that would be the MSS. Okay, so if I can't find one, that's okay. I mean, hopefully you guys understand what I'm talking about, but it would be nice to have a good example. Okay, so I think I remember where one is actually. I think it's coming up soon. Okay, I'm actually going to go to the daily and you're going to see why. So in the daily, this is going to be order block. This giant candle before this giant down move, and I know CPI caused us to go down like this, but don't ever forget I said this, please. What I'm about to say next is charts always know before the moves. On the way up, we created a bunch of equal lows, a bunch of liquidity for once we did get a sell model. There would have been a lot of good targets for liquidity on the way up that we created, and we were in this daily fair value gap, as you guys can tell. Which, by the way, this is more of a liquidity void, but I'm not going to really, I mean, that's kind of a subjective, but liquidity voids are usually filled a little cleaner than fair value gap. So this whole candle was filled, as you guys can see, which I expected. And because this is a liquidity void, once this candle is filled, I was expecting a rejection off this order block, not this fair value gap, because technically it's a liquidity void, which is different from a fair value gap. But we'll talk about that in another video. So we have this liquidity block or order block, and remember, the whole zone is a candle, but I like to draw just from the open. And obviously CPI caused this move, but like I said, charts know before the news. Trust me, the algorithm knows. This algorithm, this market knows. So we have this rejection here, and again, this is going to be your model, but in this model, you do not want a fair value gap rejection. You want a order block entry rejection. So in the model I have on Twitter, this can be an order block or it can be a fair value gap. And in this situation, since this is more of a liquidity void, and I expect this to get filled, then a better entry would be this order block. And as you can see, if you draw the fib from the most recent swing high to most recent swing low, boom, it's in discount, or I mean premium, sorry. It's in premium for shorts, which is a very good sign. And I actually just opened my TOS by accident. Oops. Let me just shut that down real quick. So that is the basic of order blocks and fair value gaps and how you look for these setups. What you'll notice a lot of times is even if your bias is wrong, a lot of times these roadblocks, or a lot of times these like fair value gaps and order blocks will be kind of roadblocks in your trading. So if you were long here, if you're long down here, you gotta expect that we're probably gonna get an initial rejection off this clean order block, because especially it's so clean. We got the break of structure down here, but on the weekly, this is on the weekly. If you look at the weekly, we have the where I think I thought this was an order block. Okay, yes it is. So it's an order block. So on the weekly, you got to keep in mind we're in an order block. So once we get to these order blocks, I like to look for the smaller time frame buy models, the buy models that I showed you on my Twitter. And as you can see, we bounce off this order block, but look, this is still a clean setup because we had the break of structure, fair value gap, and the fair value gap was in discount, as you guys can see. So there's going to be algo shorting this, but there's going to be stronger algos holding price up from this order block down here, the weekly order block. So you got to keep in mind that when you're entering, no matter if your bias is wrong or right, you'll get crazy entries if you enter in fair value gaps and order blocks, because oftentimes you will start off green. Okay, so but that's why it's good to have a stop and break even, because you won't lose as much money if you get a good entry in a fair value gap or order block. Okay, so that's about what I have for now. I'll probably go over some more like setups in depth and maybe do some reviews on some setups I take. But it's important to understand you don't take every fair value gap. You need the right parameters, and the parameters are exactly what I have in this model. We need to take buy side liquidity, which I prefer looking for equal lows or equal highs. We need to have a fair value gap or order block. We have to have a market structure shift, and we have to have the fair value gap for shorts in premium, and we have to have the fair value gap for longs in discount. So hope you guys enjoyed this video. Let me know if you have any questions. Join my Discord, and through replies you can ask me any questions. And there's other info on my Discord you can look at as well. But yeah, other than that, peace out.